Mayuresh Joshi is with us now to wrap things up. Mayuresh, great to have you on the show as always. This has been quite a bull's party today, right? They've completely decimated the bears when perhaps the bears thought they had the upper hand. Let me ask you about the banks. There's a lot of news flow, of course, including the story that we had on Indusind. If you are looking to buy one of the main blue chip large cap names afresh, which bank stock would you back?
Afternoon, Surbi. First of all, I think wishing you, Reema, Sonia, the entire team, Pavitra at CNBC TV18, a very happy Women's Day, and to all the viewers of CNBC TV18 as well.
Thank you.
When it comes specifically to banks, what has probably transpired in the last few quarters has been stellar numbers that have come through. Even in the past quarter, when you're probably looking at how the numbers have stacked up, both in terms of advances growth, deposits growth, the NIMs have been very, very stable till this point of time. And the expectations in terms of asset quality pressures have come off significantly, whether it's for private as well as the public banks. To come to your question on the larger names, obviously, I think HDFC Bank is coming very, very close to its pivot at this point of time as we speak. There has been price damage to a certain extent in stocks like a State Bank or an ICICI Bank from the larger names. But HDFC Bank supposedly has the relative strength still maintained with that. All the key features and dynamics that we were just speaking about, the bank has probably managed to maintain that. The merger, yes, I think that is a big overhang at this point of time with the merged entity names coming down to a certain extent. But overall, I think the franchise remains extremely strong. So I think on the buy watch list from the larger names, HDFC Bank, ICICI Bank will feature in. Within the mid caps, the stock that probably stands out is Federal Bank. A strong set of numbers, expectations of mid-teen loan growth going forward. The restructured book at 1.75 expected to come down. Credit costs are expected to come down significantly as we speak, and NIMs expected to get maintained around that 3.3% mark, with GNPs, net NPs expected to come down significantly. GNPs at 2.4 expected to come down below that 2% mark as well. So I think a few banks that we have on our buy watch list.
All right, Mayuresh, hi. Mayuresh, I wanted to ask you about some of these steel tube makers. You know, earlier today we had this company, GTL Industries, it used to be known as GTL Infra, and they've done quite well. I'm just looking at a chart, you know, whether earlier everyone used to only talk about APL Apollo, which is in a league of its own in terms of size as well as valuations. But a couple of these other names, Rama, you have GTL, they have done pretty well, JTL. Any view on this space? Any stocks you like from the tubes, pipe space?
Afternoon, Nigel. So I think when it comes to the overall methodology in terms of our earnings estimates that we have at only 20-25% earnings CAGR that we probably see on an annualized basis over the last couple of years, along with recent quarterly earnings, be to that extent as well. I think APL Apollo probably still stands out to be one of the better players. Yes, I think the compounded rate at which APL Apollo has grown over the last few quarters has been humongous. But if you look at the sequential performance, specifically Q2 to Q3, you've seen a significant improvement happen in terms of the EBITDA per ton that they have reported. The kind of value additions as a percentage of their overall product stroke value mix is around 54%, expected to go even higher. Being commodity consumers and closely linked to both how the steel consumption and the cycle probably moves in, I think the input cost should start going down as commodity costs have come off quite significantly. So to that extent, the volume growth that is expected in the next few quarters should be reasonable enough, which should give significant amount of operating leverage onto its balance sheet as well. The kind of sizes that the APL Apollo also makes at this point of time makes it very, very competitive to a lot of other players, whether large or mid caps within the domestic and the export markets as well. Just a point forward, Nigel, even the stock like Ratnamani Metals as an example, both the CS and the SS segments, carbon steel and stainless steel segment, have been doing exceptionally well. The export orders have held up. The domestic orders expected to remain extremely steady at this point of time. And therefore, if you look at the performance that these guys have delivered over a longer period of time, the expectation is that even a stable performance going forward should probably ensure that the stock outperformance probably continues. It trades above the key pivot levels on O'Neill. I think a couple of these stocks might continue doing well.
Mayuresh, any thoughts on insurance overall? While there is some growth compared to last year, on a month-on-month basis, there is a bit of decline that you are seeing. Any thoughts on these numbers and what explains the numbers?
Oh, yes. I think what Yash was maintaining at this point of time, I think you should see a steady flow probably come through REMA in the month of March at least, because a lot of tax saving schemes and a lot of money probably gets diverted in terms of probably saving your tax to under the ATC benefits. Now, with the new tax rules that have probably kicked in, we've heard managements of HDFC Life as an example, where their product mix is a little bit higher skewed in terms of these products itself, which would have a hit in terms of both the top line growth as well as bottom line growth as well. For the companies as well, I think the underperformance probably continues. If you probably see the annualized premium equivalent, as Yash was mentioning, has been on a downward trajectory over the last few quarters. The second aspect in terms of how their solvency ratios have stood out, I think solvency ratios have all been fine. When you talk about the embedded value for the core business itself and the return on embedded value itself has been pretty steady as well. SBI Life, it will probably stack up within the existing players, HDFC Life, Max, ICICI Group. The product mix is relatively better compared to the rest of the pack at this point of time. If you look at the overall OPEX ratio, including commissions, it comes to around 7%, which probably is the best among the life insurance players at this point of time. And HDFC Life, ICICI Group have somewhere around 20-21% in terms of their annualized expenses, including the commission costs that probably come through. The bank insurance tie-up with SBI as its anchor holding probably also ensures that the product mix and the distribution mix is appropriately laid out. So I think stacking up SBI Life relatively better place. But generally, I think all these insurance players are on a relative strength and an EPS ratings that we have at O'Neill or have a very poor rating at this point of time, more or less in terms of the delivery of numbers they have not been able to post over the past few quarters. So I think our underweight rating on the entire sector probably continues at this point.
Look at the move on Indusind Bank, 5%. It's been quite a scorcher today. Mayuresh, as we're winding up, just a specific call on this one and whether you see this enthusiasm lasting. This obviously is in reaction to the story that Lata put out on the possibility of Mr. Katpalia continuing.
Oh, absolutely. I think the extension of the CEO will become a big trigger as and if when it happens. But the two important aspects in terms of the core growth itself, loan growth still expected to be around 18-20% for the next financial year. The NIMs expected to get maintained around the current levels, maybe a tad bit here and there, so between 4.15 to 4.25 evolved. The restructured book stands around 1.25%. GNP is at 2.04, net NP is at 0.62, expected to come even lower because credit costs are expected to come down. Vehicular finance accounts for 26%, but the bank is making constructive steps in terms of building their liability franchise when it specifically comes to home loan, other unsecured loans as well. So I think the core dynamics holding out, extension will obviously act as a trigger point for the stock. The key EPS rating holds very, very strongly for Indusind Bank. I think the key pivot levels at O'Neill is somewhere around 1250 odds. If it crosses that, I think the momentum will very well continue.
Okay, 3 minutes left. Mayuresh, thank you very much for joining in.